I'm an entrepreneur, so I look for different types of opportunities than somebody else might. So if you are an employee, there's going to be different opportunities for you. If you're a business owner, there's going to be different opportunities for you. If you're an entrepreneur, there's different opportunities for you. So I invest my money in 5 places. I invest my money into my own business. I talked about market briefs. I invest my money into real estate. I invest my money into stocks. I invest my money into crypto. Then I invest my money into physical gold. This is the order that I invest my money into. This is my type of diversification. Now, I do have some cash. I always have some cash put aside for things going wrong, investments. I always have some cash putting aside there. And what I've been doing is I passively invest my money, meaning no matter what's happening in the markets, whether the market is up, whether the market's down, it's automatically
every month you have a certain amount going in. Yeah.
And this is happening into stocks, into crypto, and into physical gold. That does not change. That never changes. So I get paid. Money is automatically invested no matter what. Then in the past, I've had my more active strategy where I would take money and actively go out and buy real estate. I'd actively go out and buy stocks. And in this situation, I'm looking for good deals, meaning a good price. So I haven't been doing that as much recently, not because of what's happening in the market, but because I see more opportunities for me in the entrepreneurial business side. So I'm going to talk about tax for 1 second, if that's okay, because This is a very interesting thing happening right now, because going off of inflation, President Biden just signed something called the Inflation Reduction Act.
Was it 80 billion or something? Or
it was a huge, I think it's even bigger than that. 80 billion is just the IRS.
The IRS.
Side. So the tax side.
So they're investing 80 billion in the IRS to start auditing more people, essentially, right? To start trying to get more money from people.
And that's only one part of the Inflation Reduction Act. So let's go big to go small, because the Inflation Reduction Act is supposed to reduce inflation. That's what the name says. I'm laughing because it's kind of silly, because how do you reduce inflation? You spend less money because the government has spent so much money they didn't have, which caused money printing.
And you tax more people, bro. You collect more.
Exactly. So that's how do you now pay off all this debt? Remember, the government doesn't make money. They tax you, they tax me, they collect taxes, and then that's what they use to pay off their expenses. Now, it's not surprising that the government is running into an issue because they have almost $31 trillion of national debt that they need to pay off. This is not fixed rate debt. So as interest rates go up, their payments on this debt go up as well. So what does that mean? Well, if they have this pool of money, either they're going to need to inject more money into the government, the Fed has to print more money, but they can't do that anymore because of inflation, or they're going to need more tax dollars. So that's one of the reasons why through this Inflation Reduction Act, one of the things they want to do, which is one of the most financially interesting topics, is they want to invest very heavily, billions of dollars into the IRS to help them beef up and collect more tax dollars and past tax dollars. Now, I do want to clear up some of the false information out there, because the act is working to hire 87,000 more IRS workers.
That's crazy.
It is crazy, especially considering that today there are about 80,000 IRS workers.
So they're double.
Yes and no. So the 87,000 people that they're hiring are not all IRS agents, and they're not all being hired today. They're going to be hired over the course of 10 years. And the whole idea is, this is what they say. Again, this is what they're saying. What might happen is it could be a little bit different. Right. So I want to be just completely transparent, because I don't want to mislead people. I want to make sure everyone's fully understanding what's happening. What's scheduled is about 50,000 or so people in the IRS are scheduled to retire over the next 10 years. So these 87,000 people are supposed to replace them and beef up the agents that are actually going to be doing the auditing to go and collect more money. Now, even if 50,000 people retire, that's still adding almost 50% more people to the IRS. Who are they going after? Well, they say the wealthy, the super rich. And there's about 1,000 billionaires in the United States. Do you need tens of thousands of people to go after them?
No.
So you go a little bit deeper. Now, again, what do we look at? History. I look at history to answer the question, because they keep saying that we're not going... it's not in the bill, it's not written anywhere, this is what they say, that we're not going to go after middle income people or anything like that. Well, in 2021, 50% of IRS audits were on people earning less than $75,000 a year.
Come on.
50%.
50%.
50%.
Wow. How do they know? Is that public information?
Go search it on Google.
Wow.
Google has a lot of information.
50% of the audits were on people that were making less than
under $75,000 a year.
Wow.
And
why are they doing that?
Well, probably because if you're making less money, you're not going to have the resources to hire a good accountant and hire a good attorney to represent you. So it's a little bit easier, less costs. I mean, it's just easier, right? I mean, you're maybe less financially savvy than somebody who's making $500,000 a year or $2 million a year, because now you probably have more resources to defend yourself. So that's a bigger fight for the IRS. And you're probably more protected because you have good advisors who've told you what to do.
Right.
Because now let's say you're making—
You're filing your taxes, you're doing all the right steps, and maybe—
If you make $1 million, once you start making a lot of money, like if you're making over $1 million a year, you're not trying to play the game of trying to hide $10,000, because now you're already under scrutiny.
Yes.
The IRS is trying to see you do something wrong. And so if you try to get $10,000 under the table, it's a bad idea because you already know you're being watched.
So you do everything by the book, you're trying to be the best.
And you have good advisors to guide you to do everything legal so you can pay the least amount of taxes possible legally. Now, if you're making $50,000 a year and you have a side hustle making you $1,000 a year, you might take that in cash because you might say, it's $1,000 a year.
Yeah.
You know, it's just the reality, right? You're taking pictures at people's weddings, you're doing whatever, you're making some cash, and you're just doing it under the table. And
the IRS wants that $1,000.
And this is one of those things where it's not surprising, because if you look at what's been happening over the last couple of years, this has almost like been a foreshadow of things to come, because you remember over the last couple of years, we've seen this new rule on Venmo, right? On Venmo transactions, where they want all Venmo transactions over $600 or something like that, where now if you're, let's say you're a photographer and you're taking pictures at your friend's wedding and he pays you $700 and Venmo has to report that, they want to know that. They never said why, but now you're starting to see all these things start to add up, where if you're doing these small things, it's just like things starting to fall into place where, oh, no wonder they started wanting all these details for this. No wonder they started really going after cryptocurrency brokerages. No wonder they really started doing all of this stuff, maybe creating a digital dollar, because they want to be able to see every transaction, which means they want to be able to tax every transaction. Now, of course, I can't validate this, but it's just like puzzle pieces starting to come together. And so this is where the tax thing, why is it so important? Because of inflation, because of the national debt. The government needs more tax dollars to be able to go and fund their payments. And so what are they going to do? Well, they're going to try to find the easiest hanging fruit. Is it going after a billionaire? Probably not, because the billionaire is going to say, come after me. I have my resources, I have my army behind me.
All my accountants, they've done everything. Yeah.
We have everything there. Everything is documented because we want to play by the books, because we know you're already watching.
Right.
Now, I'm not saying that everything always is right? There's, of course, exceptions to this. But this is where you just have to understand, they say that they're not going to go after anyone making middle income, whatever.
But after you look at the 1,000 or so billionaires, okay, you got to look at everyone else.
So this is, again, right? That's what we would have to.
And you got 80,000 people working on it. It's like, all right.
It's just looking at history, right? History is the best indicator for what's coming. I keep saying that, and I'm sure your audience is getting very bored annoyed of me saying this, but it's the best indicator, because I can't look into the future and say what's going to happen, but I can look in the past and see what has happened, and I see that, hey, this is what happened in 2021. This is what's been happening, because this is just the situation. And so for me, I've also seen a big difference between good tax advisors and bad tax advisors. When I get scammed, I get screwed over, I get, these things happen. It makes me want to find a new solution. That's how I started Minority Mindset. I got scammed when I started Minority Mindset. I got screwed over when I started my event planning company. I got completely screwed over my first real estate investment deal. Pretty much every part of me had to do with something really bad happening.
Yes.
So I had a really bad tax advisor. He was really just an accountant who filed my taxes and was never on time. And I got this call. It's horrible. It was just a mess.
Yes.
I got a call from my accountant one day. I'm in the office. This is right before my morning huddle. So we have a 9:30 a.m. morning huddle. Calls me, I think it was like 8:45 in the morning. I'm in the office. He says, hey, Jaspreet, how are you? I said, good, how are you doing? He said, hey, listen, I need you to do me something. Can you wire or send the IRS $100,000 by the end of the day today? And can you also send about $15,000 to the state government by the end of the day today? I was like, what? He says, sorry, we had some miscalculations. We did something wrong. And we missed this, and you need to send this by tonight. And I was like,
jeez,
are you serious? He's like, oh yeah, one more thing. You're probably gonna have to pay a penalty on this as well.
Oh my gosh.
This is a completely true story. Like,
when was this?
This is not, this is less than a year ago.
Oh my gosh.
And so it's
that's painful.
It's very painful. And so I'm like, okay, like, I was very frustrated because I'm like, what did I do wrong? Like, what are you talking about? He's like, you didn't do anything wrong. And I was like, well, if I'm the one that has to pay this and I'm the one who has to pay the penalty, something's not right here. And so I paid it, and then I fired him pretty quickly.
Right.
Because that's not the way I like to do business. I want everything to be clean, but I also want people who care about what they do. And he was a cheaper accountant.
Yeah.
I got what I paid for. And so I went on the hunt
to find a good
top of the line accountant. And I pay a lot more than what I used to. However, the scenario is extremely different because he has a very different personality, about a different persona. And the way it works now is, one, he manages all my books on time and a handle schedule. So every month he meets with me and he shows me, hey, Jaspreet, here's your profit. We'll start from the top. Here's your revenue. Here's your expenses. Here's what your expenses look like. Here's how they changed. Here's your profit. Here's your tax liability. And here are the things that you can do to limit your tax liability.
That's cool.
Here are, 3 recommendations or whatever that we believe based off of what's happening right now to legally limit your tax liability. And he has given me so many interesting ideas because the tax code is over 2,000 pages long. And I'm an attorney. I studied a lot of tax. It takes a lot of knowledge and education to understand and read the tax code, but then things keep changing all the time. Like even this Inflation Reduction Act is changing corporate tax structure. So you need somebody who literally eats, breathes, and all they care about is tax. And this is this guy, right? And I'm like, dude, like, this is amazing. Like, I love this because I don't have the time and I don't want to spend my time thinking about taxes and all the cash flow stuff. I want to build my business. I like entrepreneurship. I like this stuff because it gets me excited. It's the way that my brain works. It's the way that it gives me my purpose, right? And so I do that. I like investing in real estate. I like investing in stocks. I'm passively doing it in stocks. It's a matter of now, what is that lifestyle? Now, if I wasn't an entrepreneur, what would I be doing? Yeah, I'd be stacking up cash to find good investments either in the stock market or the real estate market, or to buy a startup because it's very accessible now thanks to the internet, thanks to all the crowdfunding sites out there. And I'd be passively investing. Like, I would not change that. So I think everybody should be doing this.
You can put $100 a month away into stocks or into an automated account that is investing for you.
Did you know if you're 21 and you start investing $100 a month and you never change that, and you just get a 10% return on your money, which is the average stock market return, and you do that until you're 65, you will retire a millionaire.
Come on.
We're talking about less than $4 a day. I need a phone for my business, so I deducted my iPhone from my income. I had to go to San Diego last year. I had to go to Manhattan last year. I spent about 2 months in San Diego and about a month and a half in Manhattan last year. Both of those were expenses. I got to expense my travel, my flight, my Airbnb, my meals,